Hi, all. This is Eric Goldwine from the Long-Term Care Community Coalition. We're excited for today's program, Behind Closed Books, with our presenter, Ernie Tosh. Before getting into the program, Haley, if you could go to the next slide, we're going to share a little bit about Giving Tuesday. And just as a reminder, next week after Thanksgiving is Giving Tuesday, and the Long-Term Care Community Coalition fights each day for better care, safety, and humane treatment of residents. And we would love for you to join us in our mission so that we can continue to be a strong voice for quality care and life with dignity in the coming year. So the way to do this is you can go to nursingHome411.org/donate, or you can click the QR code to the right. You point your phone at that little dinosaur, and hopefully there should be a link that comes up that says nursingHome411.org/donate. Again, that's nursingHome411.org/donate, and we would love for you to contribute what you can to LTCCC so we can continue providing free materials and resources and supporting advocacy and programs like the one today. So a little bit about LTCCC. That's 3 C's. We're the Long-Term Care Community Coalition, a nonprofit, nonpartisan organization dedicated to improving care and quality of life for elderly and disabled in long-term care. We do policy research and analysis, systems advocacy, public education, and we're home to 2 local long-term care ombudsman programs in New York State. And on the next slide, one of the public education things we do is we host these monthly webinars, including today's, which is called Behind Closed Books: How Hidden Profits Harm Nursing Home Residents. And we will have materials for this program posted on our website. In fact, we already do at nursingHome411.org/webinar-LTC-money. And so the slides are already up, and we'll have video for the program either later today or tomorrow morning. And a little bit about our presenter. You might recognize Ernie from he was on an LTCCC podcast. He's been on webinars. He's been on TV. He's been on the radio. He's been at conferences. He's been at documentaries. You've seen him a lot of places. You might have even seen him in court. He's an attorney and expert in nursing home finances, and he leads the Tosh law firm and limits his practice to nursing home abuse and neglect cases. He is a frequent lecturer on forensic accounting and nursing litigation, and has testified numerous times as an expert in this area, including testifying before Congress. And we're thrilled to have him today, and perhaps with a guest appearance with his dog Gimli, who we saw earlier before the program. But he'll be chatting about nursing home finances for the remainder of this presentation. And again, if you have questions, use the Q&A, and we'll do our best to get to them. So without further ado, here is Ernie Tosh.
Thanks, Eric. Really appreciate it. It's great to be here. As Eric said, in the background, you might see what looks like a black pony. That is my dog. We just moved into a new house, and putting her outside has been a problem. Because she just stands at the back door and barks because she can see me. So I'm hoping she will not fire off while we're doing this presentation. But let me start my presentation here. What I want to talk to you guys about today is basically some of the financial reporting that is in place right now by CMS, and show you how nursing homes are able to manipulate those financial statements. And the reason that that is important is because by manipulating the financial statements, they do a couple of things. Number one, they're able to claim that they're losing money when in effect they're making massive amounts of profit. So they can go to their local legislator and say, we're losing money, we need more reimbursement. we need more Medicare money. We need more Medicaid money. You can't do that as effectively if you're making millions and millions of dollars of profit. So they manipulate their income statements to make it appear as though they're losing money. The second thing that having a financial statement saying that you lose money is that it has a positive effect on your litigation. If attorneys come in to sue you and they see a financial statement that says, oh, this place is losing money, then they believe that, well, we're kind of stuck with the insurance policy. There's no reason to push for more than the insurance policy because this facility doesn't have the money to pay for it. And so you can effectively decrease your litigation settlements by manipulating your financial statements. And so, and third, it allows you to explain away why you don't have sufficient staffing. I don't have sufficient staffing because I have no money. I couldn't have hired more staff. Well, I'm going to show you where that's a lie. They could hire more staff. They just chose not to. Instead, they chose to make more profit. So, as Eric was stating, I am an attorney. I am licensed in Texas and 4 other states. I practice all over the country. I only do nursing home cases. I am also an expert witness on nursing home finances and staffing. I have a company that consults on that. We've written software that does financial and staffing analysis, and I regularly testify about that in various settings around the country. So I hope that this presentation will be useful in understanding how the financial system currently works. And at the end, I'm going to talk about some changes that we would like to try to make to keep this manipulation from occurring. So number one, it's that time of the season where pumpkin spice is back. I would just like to underline the fact that I hate pumpkin spice. I think it is.
Ernie, a quick heads up, your PowerPoint isn't shared yet.
Oh, no, hold on. I thought it was. Thank you very much, Eric.
Yeah.
Let me see if I can get that shared with people. All right, here we go. All right, Eric, can you see my first slide now?
Yes, and you want to do
okay. So this is what I was talking about, pumpkin spice. This type of season, everything seems to be getting pumpkin spiced, and every year it seems to be more, and it reaches a point where you just go, that should not happen. And this is one of those occasions. Pumpkin spice Twinkies does not even remotely look appetizing. It actually looks like they may have stuck a hot dog inside a Twinkie, which would probably be better than this. President Biden a couple of years ago discussed his initiative in the State of the Union address concerning nursing home care, specifically quality of care in nursing homes. And those of us in this area got really excited because that's the first time a president has spoken about nursing homes in a State of the Union address. And so we had great hopes for what could happen. Unfortunately, the industry has watered down pretty much everything that's come forward, and that includes the recent establishment of minimum nursing home staffing that CMS has put out a proposed regulation, has asked for comments, and we were sorely disappointed when this came out. We were hoping that we would finally get a national standard, which would be in line with the research and all these scholarly articles that have been written in the last couple of decades that talk about nursing needing to be around 4.1 hours of nursing per patient per day. And instead, the standard came out and was shockingly low. So because of that, most of us that are in this area have actually voiced our opposition to CMS having a minimum staffing requirement. We believe that this staffing requirement is so low that it'll actually increase the number of injuries instead of decrease, because the facilities will staff to the minimum instead of staffing to the care needs of the residents. And so I am on record as being opposed to this regulation. One of the other goals was to strengthen payment incentives to improve staffing and turnover. Instead of CMS taking that over, they've left that to the states. Increased ownership transparency. Well, CMS released more ownership data this year. It's if you go to CMS Compare and scroll down to the bottom of the page when you're looking at a single facility, you'll see a link to some ownership data. Unfortunately, that information is only as good as what CMS collects, and CMS doesn't collect enough data. And so that is very lacking. So for them to think that that's a feather in the cap of increasing ownership transparency is untrue. Increased financial transparency. CMS is going to release Medicare cost reports online this year. Again, the problem is those cost reports have always been available. It's just been a little more difficult to get them. You had to send a Freedom of Information Act request. So yes, having them online makes them a lot more readily available. The problem is, unless you're an accountant, they're almost impossible to read. So there needs to be some type of interface that kind of distills what that information is, instead of just providing these huge spreadsheets of information that on the surface won't mean anything. Nursing home associations have lobbied against minimum staffing, and that's why the number that came out got pushed down so low, is because the nursing home industry has tremendous lobbying power. They have tremendous connections into CMS. And so they lobbied like crazy to make sure that the minimum staffing was set as low as possible. And they were successful. What they did was they put out a lot of misinformation. Government payment rates are inadequate. They were saying that they needed more Medicare and Medicaid money and they weren't getting it, and therefore minimum staffing would bankrupt them. That nursing shortages would make it impossible for nursing homes to hire more nurses. Well, when you pay your nursing staff as though they were, Walmart greeters, yeah, you're going to have a shortage of people who are going to apply for that job. If you're paying minimum, salaries, you're going to get minimal interest. These nursing homes have the resources to pay competitive salaries in their areas. They just choose not to. They said that over half of nursing homes are facing bankruptcy and may close. That's not true. I'll show you today how they are manipulating their income statements so that they can say this, but it's actually just a smokescreen. And that rural nursing homes are going to close. Well, yeah, of course, some rural nursing homes are going to close. That's true. But the fact of the matter is the vast majority of us don't live in rural areas. And the reason that these nursing homes are closing is because more and more people are moving away from rural areas. And so there is not a need for those nursing homes. So yeah, that is going to happen. Now, barriers to policy change, lobbying, like I said, the nursing home lobby is formidable. The total amount of reported lobbying for hospitals and nursing homes in 2022 was $125 million. There's almost 1,000 lobbyists for the industry. And the industry has 3 provider magazines that are constantly churning out misinformation. So those of us that are on the other side of this going, how do we compete? How do we get meaningful change? You have to be very cognizant of the fact that we can't outspend them. We can't out manpower their lobbyists, and trying to put out relevant, honest information to counter the amount of misinformation they generate is difficult. But we're trying. Now, not trying is Jell-O. Jell-O pumpkin spice cheesecake just sounds like the worst combination. I mean, Jell-O cheesecake, number one, very weird. But then to pumpkin spice it, that's just over the top. Now, as I stated earlier, I want to talk about smoke and mirrors. Smoke and mirrors is what the nursing home financial reporting system is. On its surface, you know, it sounds like a good thing. It sounds like we're getting good information until you realize, no, we're not. The way that I like to explain this is to say, think about an octopus, okay? And somebody shows you the last inch of an octopus's tentacle. That's all they show you. They show you that and they say, what animal, what creature does this belong to? And you look at it and you go, well, looks kind of like a tentacle and it has a suction cup on it. So, you know, it's probably an octopus, but it could be another cephalopod. It could be a cuttlefish. It could be a squid. You're not really sure. So that's really what the reporting system is like for finances in the nursing home section right now. We're only shown the last inch. We're not shown the rest of the creature, which would be the entire chain and all of its corporations. And only by seeing the entire creature can we really understand how much money these chains and these individual facilities actually make. So let's talk about the nursing home organizational structure. In 2004, an article came out that explained that nursing homes should fracture their businesses up to do 2 things. Number one, it makes litigation against the corporations much harder, and it makes financial manipulation much easier. And so the nursing home industry took that to heart. And in the last 20 years, basically every nursing home chain in the country is structured like this. So what you have is, you have, you know, Tosh Senior Care. That's my nursing home chain, and that's the parent company, Tosh Senior Care. And I own nursing homes down at the bottom. And I own a real estate holding company, which holds the real estate for each of my nursing homes. So the building and the land is not owned by the nursing home company. It's owned by the real estate company. And more recently, instead of having one real estate holding company, the chains have created a real estate holding company for each nursing home. So for every nursing home, you have a real estate company. So you would, if you had 50 nursing homes, you would have 50 nursing home corporations, because each facility is held in its own LLC. So you'd have 50 nursing home LLCs and 50 real estate holding company LLCs. So right off the bat, you have 100 LLCs. Then above that, you've got a management company. Now, management company oversees all the nursing homes. You may have a consulting company. You may have therapy companies, a pharmacy, a nurse agency company, just a whole plethora of companies that are all owned by Tosh Senior Care, and they all do business with the nursing homes. Okay, so it's a very complex business structure. And again, it makes suing and getting back to the parent company extremely difficult in litigation. Now, right now, our financial reporting as it exists today is only at the nursing home level. We only get a financial report. It's called, if you want to know, if you want to write it down, it's CMS form 2540-10, 2540-10. And that is it's all commonly referred to as the annual cost report. And it is a very extensive financial reporting document, but it is only about the nursing home. So if you have 50 nursing homes, you're going to file 50 individual cost reports for each facility. But the real estate holding companies have no filings, or the management company, or the therapy companies, or Tosh Senior Care. Now, Tosh Senior Care does have a single filing, CMS Form 285, which is the called the home office cost report, but all it does is identify what nursing homes it owns and how it allocates the home office costs to each of the nursing homes. So it's very, very limited usefulness. So let's take one nursing home, and we're going to look at the income statement, and I have simplified it for our discussion today. It's actually much longer than this, but we don't need to get into all the accounting of all that. But when you look at this document as it's filed in that annual cost report, the top line is total patient revenue. And I just want to point out that's not really revenue. It's really how much of the facility bill. It's a billing statement. So in this example, we say that they billed $16 million. Then there's the write-off, which is the next line, where it says they were not able to collect 1.75 million of that 16 million, but they were able to collect 14.25 million. So that's the number that we're really concerned with in the revenue section, net patient revenue. That is the money that hit their bank account, $14.25 million. Now, next we look at their expenses. Total operating expenses, $13 million. So you take 14.25 and you subtract the 13, and you end up with a profit of $1.25 million for a single facility. And you go, wow, that is a lot of profit for one nursing home. Okay. This creates problems for the nursing home. How are they going to go to their legislator and beg for more money? If you're making that much profit, the legislators are not going to give you more money. Also, if an attorney comes along and sues you for killing somebody's grandmother, that is an attractive target because they know that they're not going to be limited to the insurance policy. You're going to have extra money for them to try to collect. So if you're the nursing home, you need to hide that profit. So when you look at the revenue and expenses, you've got to figure out where you can manipulate. You can't manipulate your revenue. Your revenue is what it is. It's 14.25. You can't manipulate that number easily. So you have to look at the operating expenses and figure out how to manipulate that number to get rid of your profit. So if you think back to our example of how these chains are organized, you can see that when CMS calls some of these companies related parties. Okay, so the related party means that if you have a nursing home that is doing business with another company and they're owned or controlled by the same parent company, then they are considered to be related parties. So if you think about this as parents and children, and all the children are, siblings to each other, in this diagram, nursing home 1 is doing business with the real estate holding company, and they are both children of Tosh Senior Care. So they are related companies. Nursing home 1 is also a related company to the management company, and to nursing home 2 if it actually did some business with another nursing home. But CMS requires these transactions to be disclosed in the financial records. In the filing, the 2540-10 has a page that's specifically about related party transactions where they have to disclose these transactions. But CMS does not require that these transactions be done at cost, which leads us to how this manipulation occurs.
Ernie, we got before we get to this punchline, we got a couple of good questions.
Great.
I'll start with this is really timely, but from Jan Shelley, are there any states that require more information regarding related entities, for instance, in their incorporations regulations? It might be effective to advocate on the state level, and that information could then be available by a corporate entity search on the Secretary of State's database. That's from Jan.
Okay, so there are states that require related party transactions to be disclosed. California is one of them. A lot of the okay, so let me back up. Besides there being a federal annual cost report, there's actually also state level annual cost reports. And depending on what state it is, every one of them is very different. And some of them are more useful than others. Texas in particular is not very useful. California, very useful because they also require additional reporting. Like they require that you identify how much the facility administrator is being paid and how much the governing body is being paid. And so there is better information there. As far as related party transactions go, the reporting that CMS does, if a state requires related party transactions, it's probably be consistent with what CMS requires. California requires it, but it is pretty much the same reporting that California does. So we need better oversight of this. The other thing, which is very disheartening, is that CMS doesn't audit this. They don't audit the cost reports at all, actually. And so we often find filings that are complete garbage, and they've been sitting in CMS's database for years. And it's just clear that CMS does not give any auditing time to cost reports, which also should change. Richard, what was the second question? Or Eric?
So there, you kind of covered this, but Christopher James asks, are there any government websites or documents which compare CMS quality rating for a facility with the revenue for that nursing home over several months or years?
No, not that I'm aware of. Actually, Richard and I and some other organizations have talked about trying to construct a similar site to CMS's Compare website that would have more relevant information, because so much of the data that CMS uses can be manipulated by the individual facilities. And so it's an ongoing discussion. Some of it has to do with the my company's ability to data mine and be able to provide a lot of the underlying analysis. We are currently writing programs to try to do that. Problem is CMS data is just garbage sometimes. And so it's very difficult to sift those kernels of knowledge out of all the garbage that's there. So anyway, we're working on it. But moving forward, pumpkin spice hummus is not a move forward. And I'm not really sure what's on that hummus. That looks really questionable, but the fact that they put pumpkin spice in it is beyond me. So back to our income statement. We know that we need to be looking at our operating expenses to figure out how to get rid of that $1.25 million profit. Why? Because we want to decrease our litigation. And number two, we want to go ask for more government money so we make more money. So this is where the manipulation comes in. You want to move money from one pocket to another pocket and then show the world the empty pocket. It's as easy as that. Okay. Think about if, you want to say, oh, I don't have money to, loan to your, little brother because he wants to go buy a candy bar. You move your money from your front pocket to your back pocket, and then you turn out your front pocket. I got no money. I can't help you. Okay. That's exactly what these facilities are doing. Okay. So let's talk about it. The expenses. If you have a facility and they own the land and building that they are using, and they have a mortgage on it and they pay taxes on it, etc. In our example, it's about $600,000 a year. Okay. That's what it costs for them to provide the physical structure to the residents. It's about $600,000 a year. So what they do is they set up that real estate holding company that we talked about earlier, and they move the land and building to the real estate holding company. Then the real estate holding company leases the building back to the nursing home. But they don't do it at $600,000, which is what it used to cost. They now lease it back at $2 million. Okay, $2 million lease for the same building. So the difference is just 2 million minus 600,000. It's a $1.4 million increase in expense specifically for the land and building. Now, if we go back to our original income statement, that 600,000 was in our $13 million number already. It's already in there. But when we add in the additional $1.4 million, because our expense went from 600,000 to 2 million, now our total operating expenses are 14.4 million. And lo and behold, look what happened to our $1.25 million profit, and now became a $150,000 loss. Now I can show my income statement to the world and say, look, I'm on the verge of bankruptcy. Every year I'm losing money on this facility. I can't hire more nursing staff. Wah, I need more Medicare and Medicaid money, or we're going to have to close. It's all smoke screens and it's all manipulation. That money went from one pocket, the facility, to another pocket, the real estate holding company, but the pair of pants is being worn by the chain's owner, the parent company. And they don't care what pocket that money's in, because it's all going to go back to the owner. So when you're talking about staffing, when you're talking about infection control, when you're talking about pretty much any of the injuries that my clients and my clients' families suffer, it all comes back to the facility not staffing correctly. And the facility's response is, how could we staff more? We have no money. And then they show you that manipulated income statement. And they show that manipulated income statement to state legislators and federal legislators and beg for more money. And they've done this for 20 years. And the legislators have not caught on to the con. And so that's why we're here, trying to help you understand this is all a con. And they have successfully run it for 2 decades to the tune of trillions of dollars. And another con, pumpkin spice crest. That is disgusting. I can't imagine eating and then choosing to brush your teeth with pumpkin spice. Ugh. Ugh. So the solution to our manipulation issue is you have to have financial transparency, and we need ownership transparency. Okay, so when we talk about the corporate structure that we use to do the manipulation. Now, in our example, it was a very simple example. We just moved the money from nursing home number 1 to the real estate holding company. That's all we did. That was a super easy maneuver. Now, in practice, these nursing homes will have somewhere, from maybe 1 or 2 related parties to a couple of dozen or more related parties. And so the financial transactions become extremely complex. And then when you do them over years of time, they're very complex. The most prominent used related parties are going to be real estate holding companies for the lease, because you can move so much money in that one transaction. The other most used related party is a management company, because you can move a lot of money to a management company. Most chains also have therapy companies, and some of them will break them up. It's not just a therapy company. They'll have a physical therapy company, an occupational therapy company, and a speech therapy company. And I would say the majority of the chains have therapy related parties. Probably 20% have pharmacies, but the problem with pharmacies is you can't move very much money through them. If you move very much money through them, it becomes really apparent very quickly that it is just part of a con. So much easier to move money through real estate companies and management companies without raising that big a red flag. So anyway, the corporate structure being what it is, and the fact that the corporation controls all of these contracts between the related parties and can set them to be anything they want, creates the ability to manipulate financial statements. So what we need to do is change the financial reporting. Because right now, when we look at our structure, nursing home number 1 is filing an annual cost report. Okay, we talked about that, CMS 2540-10, annual cost report. It's only for that nursing home, and it is super manipulated. Second nursing home files the same document, but for its financials. And every other nursing home in the chain does the same thing. 50 nursing homes, 50 cost reports. Trying to piece together what happened inside a company of that size using 50 cost reports is, again, looking at the tip of the octopus tentacle. You're not going to see the entire creature. You're just going to see the tip of the tentacle. We have no reporting on the real estate holding company, no reporting on the management company, and certainly no reporting on the parent company. And that's what has to change. We need financial transparency. And what we need is consolidated, audited financial statements.
Ernie, a couple questions while we're here.
Sure.
A couple people asked about non-profits. So there was a question from Ann Monroe. I know this is a problem for for-profit ownerships. Does the structure exist in the nonprofit world as well? And there's a related question by Anonymous. What about non-profit nursing homes that raise the same concerns about being underfunded? Are you implying that they too are hiding money despite missions and 501c3 reporting requirements? I figure we can get to those two. They kind of go together.
Sure. So true nonprofit, and yeah, I mean, I'm going to say true nonprofits do not have this complex structure. They may break things up a little bit, but by and large, it's not going to look like this. And you can, if you're familiar with staffing patterns, as soon as you look at their staffing patterns, you can see whether it's a nonprofit or a for-profit. It is clear as soon as you see the staffing patterns, if that's a true nonprofit. Now, the distinction I make is there are quite a few nonprofits in the market right now that are, holding themselves out as nonprofits, which are not true nonprofits. I mean, by true nonprofits, what I mean is it's a facility that is run to where all the money that's being brought in is used for its existence and for its staffing, and there is not a profit factor being sent to an owner. So in a true nonprofit, and that's what I tell people, I get called regularly by elder law attorneys saying, hey, I've got a client or my client's family that needs to be placed in a nursing home. Can you tell us a good nursing home in Philadelphia or Baltimore? And my response to them is, if I know a facility, then you don't want to go there, because I'm only going after the bad ones, not the good ones. So my, pat, quick answer is no, I don't know the good ones. But my second answer is go look for nonprofits and then look at their staffing pattern to determine if they're a true nonprofit. The distinction in staffing can be seen in how they staff their RNs and LPNs. If they're staffing their RNs under, really it's under an hour a day, but to really see the distinction, it will be, you will see staffing of an RN of less than a half an hour a day per person. LPN staffing will be higher than the RN staffing. It will be maybe 2 or 3 times higher. That is clearly for-profit staffing. They are drastically understaffing RNs and trying to replace that staffing with LPNs, which is not effective because LPNs cannot do what RNs do. So that is an ineffective trade-off, but they will do it because RNs are so much more expensive than LPNs. In true nonprofits, you will not see that staffing pattern. You will see, an hour or more of RN time, and the LPN time will be less than that, maybe half that much. That is where you see that is a true nonprofit. If it's not a true nonprofit, what you will see are these types of transactions. I've got the corporate structure slide up again to talk about. You will see similar transactions to this, but they will not be in the financial filings. And this is why. The parent corporation doesn't own the real estate holding company or the management company or the therapy companies, okay? The parent company owns the nursing homes. So it doesn't report these related party transactions with real estate holding companies and management companies because those companies are not owned by the parent, so they're not considered related party transactions. But what we found out is those companies are owned by the trustees that run the nonprofit. And they're the ones getting the profit. Just like the owners in a for-profit, the profit is running out of the nursing homes into the real estate company and the management company, and then it's going to the trustees. Okay, because the management company and the real estate holding company are not nonprofits. They are for-profits, and that money's going to the trustees. And so again, those transactions won't be in the financial filings because the management company and the real estate holding company aren't owned by the trust that owns the nursing homes. So it makes it even more obscure and much deeper to go do a deep dive on those companies. But that does happen, and we have run into that. So any other questions before I go on?
We're gonna move forward. We got plenty, but I want to make sure we cover
Okay.
the policy stuff. Yeah.
Sure. So I'll tell people at the end, I'm going to give you my telephone number and my email address. If you've got some questions that you would like to ask me, just send me an email and I'll be more than happy to discuss things with you. And just also to let you know, I'm about to go on vacation. So if I don't get back to you for a couple of weeks, it's because I'm on vacation. So to take away the ability to manipulate these financial statements, we need to require more robust financial reporting. And that is consolidated audited financial statements. Consolidated means that we want to start at the very top, Tosh Senior Care, and we're going to file a financial statement for Tosh Senior Care that includes all of the profits and losses of all of the corporations that it oversees. Okay, that's what consolidated means, from the top down. Instead of looking at the last inch of the tentacle, we want to see the entire creature. Second, audited. Audited by a third-party CPA that is not, basically not an employee of the chain. Because right now, the accounting department for these chains are filing the cost reports. So it's self-reporting. And it's because of this self-reporting that the manipulation gets in there. So, and to be honest, there's just outright fraud in some of them. But being generous, we're just going to say that they're using certain accounting principles to manipulate these cost reports like we've discussed. But we want them audited by a third-party auditor that's asking the tough questions, that is making sure that what is being reported to the state and federal governments is actually accurate. Because in all honesty, and I understand that I am jaded because I am an advocate for residents, the nursing home chains can't be trusted, and you have to verify what they are saying. And then financial statements. What are financial statements? Consolidated, audited financial statements. So financial statements is basically a packet of different financial documents. It's the income statement, like we just talked about, expenses and revenues and how it comes out to be profit or loss. We want expenses by, broken down by category, which already exists in the cost reports. We just want it for the entire corporation. Cash flow statements showing what is their cash balances annually, so we can see, do they have appropriate cash reserves, or are they in a cash crunch crisis, which could affect staffing? We want their balance sheet to see, their lists of assets and liabilities. And there's a few other statements, but those are the most important ones. And so you get them to file these financial statements for the entire organization, and you have them audited by a third party. And then you make them available to the public. Okay, and that's super important, because remember when I told you that there are home office cost reports, CMS Form 285? Well, guess what? If you FOIA request, Freedom of Information Act request, a CMS Form 285, you will get it and it will be completely redacted. It looks like a CIA memo where everything below the title is basically blacked out. So you have to make these financial statements, these financial filings to the public. And so we are working with several state legislators right now. This has actually been passed in California. It's pending in New Jersey. We are working in Colorado, in Maryland, to try to get these financial transparency statutes in place so that we can get better information for the public, and specifically for the legislators to stop being conned by billionaires. This is ridiculous to keep giving billionaires more and more and more taxpayer money. It's all a damn con. Stop falling for it. Ownership transparency is the other thing that we're moving towards as well. And it's because as anybody who's tried to figure out who owns what nursing home at any one time, it is extremely difficult because CMS's data is not updated regularly. And so it is very difficult to figure out which nursing homes are in which chains at any one time. They sell these facilities back and forth to each other, like they're trading cards, like Pokemon. They move the cards back and forth and around so much, it's hard to tell what facilities in what chain. And so what we want to do is have that ownership transparency all the way back to anyone who owns 5% or more of a nursing home must be disclosed. Right now, the disclosure is only a couple of layers back. And if you create a Russian nesting doll of LLCs, where the exterior LLC owns the interior LLC, and you just keep layering until you get back to the individuals who actually own it. Well, right now, you're only going to get the names of a couple of different LLCs. And that may not be enough, because if you've got enough layers of LLCs, each of your nursing homes will appear to be owned by a different company. But in fact, if you trace the ownership back far enough, they're all owned by the same person. And so that's what we're talking about, is you have to trace the ownership all the way back to the individuals or companies that own 5% or more. And if you do that and you make that information available publicly, you will be able to reconstruct the nursing home chains as needed. And that's very, very important when you start talking about chains that are chronic underperformers. You don't want to just go and willy-nilly, okay, we're going to go, put this one nursing home in Texas on the special focus list and this one over here in New Jersey, and not realize those two facilities are owned by the same company. Okay, this may be a company-wide issue. You may need to have a corporate integrity agreement with the entire corporation to fix this problem. And so again, we have to see the entire creature to understand how to fix what may be wrong. So, speaking of things that are wrong, Pepto-Bismol pumpkin spice. If you didn't have an upset stomach before, as soon as that hits your tongue, you will be retching. We have been working with the attorney generals around the country in nursing home fraud cases, both criminally and civilly. As I stated before, the company that I have that does forensic accounting also has the single largest database of nursing home information outside of the federal government. And so I've actually sued CMS to get more information a few years ago. So we have extensive financial information. We have extensive collection of minimum data sets. And with that, we can do data mining that helps us identify targets for fraud. And so the most active and proactive AGs right now are in California, New Jersey, and Pennsylvania. So if you are from one of those states, you should give a kudo to your AG's office, because they are being proactive and they are going after these nursing home chains. If you're not in one of those 3 states, you should probably contact your AG's office and ask them why they're not going after, corporations who are fraudulently taking your taxpayer money. So just to very quickly show you kind of what is possible when you have information and why we want the financial and ownership information available, is so that we can do this type of thing and make it public, so it's helpful when you're having to place a family member in a facility. But just looking at staffing, this is staffing that is available publicly. It's the payroll-based journal, PBJ, like peanut butter and jelly, payroll-based journal data. And we used it to create this interactive graph where you can click on a state and it tells you what is the average hours per patient day of staffing in that state. And as you can see in Texas, the average is 3.27, so 3.3 hours of staffing. That would be RNs, LVNs, and aides per patient per day, 3.2 hours. That is basically criminal. At 3.3 hours, you are understaffing quite severely unless you have a very, very low acuity in your facility. You can click on a state and it's going to take you into a county map that shows what's the median staffing for these different counties. And if you click on the county, it's going to also tell you what's the average size of the nursing home. So in this county in California, 54 beds, its average staffing was about 3.6. And then if you zoom in, there's the way to look at number of facilities in California that were understaffed by day. This is number of facilities understaffed by day. And what you can see is that on the weekends, which is the top row and the bottom row, Sunday and Saturday, they are horribly understaffed on the weekends. But we all know that. We're all advocates. We know how they staff. And on the weekends, there's no staffing. And if you look at December on the far right-hand side, you can see that on Christmas Day, day after Christmas, and on New Year's Eve, horrible understaffing. But we already knew that too. Holidays are understaffed. They can't get people to come in and they have a bunch of call outs. So this is just a depiction to show what we already knew by anecdotal information, but this is, again, data driven. And so we can see in the state of California, which has just short of 1,200 nursing homes, this is the number of nursing homes that are understaffed every day. And as you can see on the weekends, it's almost 400. Okay, that's a quarter. Actually, it's a third of the nursing homes in California are understaffed on Saturdays and Sundays. And that's versus their state minimum. That is not based on the acuity of the facility, which the number would be even worse than what we see here. This is just based on their state staffing minimum. These are the facilities that are not meeting their state minimums. Then if you click into a county, you can see single facilities and the days that they're understaffed versus the state minimum. So that first one at the top there, you can see it's been understaffed every single day for 4 years. How is that facility even open? And the other thing is, it wasn't getting cited for understaffing. So when facilities, come out and say, oh, well, people say we're understaffed, but, we've never been cited by the state for being understaffed. My response to that is, that's a state regulatory issue. That isn't because you were staffed correctly. And so we can see every facility in the state and how they're staffing on any particular day. So, this is, again, just a single facility broken down by months across several years to see, trending. This is all just data-driven analytics. And this is what we could do with their financial information if we were able to get it. Get that financial information, get the staffing data, get the quality measured data, and actually be able to tell the public, these are the good facilities and these are the ones you need to avoid. Now, to avoid is spam pumpkin spice. Now, I, in all honesty, thought this was a joke. When I came across this picture, I thought, okay, that is a great Photoshop. And I included it in a presentation a couple of years ago that I did for Consumer Voice in Baltimore. And I just think it was funny, but I did not believe it existed. This summer, I was doing a program in Oklahoma for their ombudsman and their AG's office. And one of the ombudsmans brought me a can of pumpkin spice Spam. She had been in Baltimore and thought the presentation was hilarious and went on eBay and paid, as near as I could tell, because I went and looked later, about $70 for this can. And I can absolutely guarantee you that can will never be opened. That is the most disgusting pumpkin spice thing I can come up with. I appreciate everybody for being here. If you have questions, please ask them. I'll be more than happy to answer more questions. If you want to contact me because you think of questions later or we don't get to your question today, please drop me an email. I'll be more than happy to talk to you about it. This is my information. My cell phone number is there as well. So please just reach out if you've got any questions I didn't answer today. Eric?
All right. Thanks, Ernie. I want everybody to write down that email address. We'll also have slides again that it'll be emailed to you. We actually have it set to email 48 hours later. So we forgive you if you don't open that on Thanksgiving Day, but that'll be at nursinghomeforward.org/webinar-LTC-money. And again, that'll have the slides and a recording of this video. Thanks all for the questions. I know there's a lot and we didn't get a chance to get to everyone, but we really do appreciate the engagement, and it informs some of our advocacy and some of what we look into, not just in today's program, but just as our mission overall. So, and thank you, Ernie, for your presentation, for coming on here. As always, it's there's a lot of data out there, and we need people to make sense of it. And we appreciate you coming here. So, on that note, we have a couple LTCCC programs coming up. Next Thursday is our monthly family empowerment program. We're going to talk about compassion fatigue, and the idea of compassion fatigue is that it takes a lot of energy and effort to look out for your loved ones in nursing homes, and that's a reality. And we want to talk about how we can move forward and how we can still effectively advocate for residents in nursing homes. So please join us. This is for families and advocates of nursing home residents in New York, but everyone is welcome to join, and that'll be next Thursday at 12 p.m. Eastern time. And then we have our next program, our next webinar, which will be December 19th at 1 p.m. Tuesday. Save the date. You can sign up for that. We'll have more information about that program in the next week or two. And then lastly, if my memory is right, I think we got one more slide. We have two more slides. One, again, materials from today are at nursinghome411.org/webinar-LTC-money. We also encourage you to share your comments on CMS's proposed minimum staffing standard with your senators and members of Congress using LTCCC's action alert. That URL is a mouthful. I'm not going to try to repeat it, but that will be on. We'll post that on the webinar page. And again, we are now on Instagram as of a few days ago. Follow us at LTC Coalition. Thank you everyone for joining us. For information on the next programs and for resources, for staffing alerts, for fact sheets, for everything, you can sign up for us with at nursinghome411.org/join. Again, it's Giving Tuesday, so don't forget to consider LTCCC. Your support helps us continue to provide free resources and programs like the one today. And Ombudsman, we know some of you get credit for attending this program. Look out for an email in the next couple of days that will say so-and-so, thank you for attending this program, and you can use that as confirmation. And we're at 2:07, which we've already gone over, and we really appreciate everyone's time. And we're going to close up. Happy Thanksgiving to everyone, and I hope everybody has a healthy and happy holiday. Bye all.